Hey, this is Justin with DayTradeTheMarkets.com. It's Friday, April 28th, and I wanted to talk about an interesting setup today in crude oil. What was really looking to be an amazingly good trade that kind of flipped on a dime, and talk about when you need to really pull the plug on even a good trade. I know that can be hard to do at times. So before we get to there, and I've got this kind of blocked out because I want to talk about it before, as if we don't know what's going to happen. Before we talk about that, let's do a little bit of kind of a background. When we're looking at this is crude, what I like to do, or what I like to teach, and how we do things is we kind of think about things on two kind of concurrent parallel paths, if you will. Okay, the first side is more of a bigger picture analysis. Okay, so bigger picture, and that's made up of the bigger picture bias, which we talk about each day in our daily market assistant, and also about the bigger picture key levels in terms of which side wins the key levels. Okay, and so that kind of makes up the bigger picture. That's like one parallel line. That's like one side of the train tracks, if you will. The other concurrent line, and we always want to try to tell that story kind of individually. Okay, then the other concurrent thing that's going on is today, if you will. Today, market, strength slash weakness. Okay, and we do that with boxes, what we call acceptances, rejections, and so forth. Okay, so but ultimately what we're doing is we're telling two stories. We're telling the story of today, we're telling the story of the bigger picture. Okay, and when you have a situation where both of them are in alignment, okay, bigger picture and the action of today are in alignment, it's kind of ding, ding, ding. We've got a really great opportunity. We need to take advantage of that. Now, there are other times when maybe the story from today will be a little different than the big picture story. That doesn't mean you can't trade. It just means you have to adjust your style. You can't be overly aggressive on entry. In other words, you have to be a little more conservative on entry. And you can't be overly aggressive and go for the huge winner on the exit side of things. You need to probably just go for a one-to-one type risk to reward ratio when things are not quite in alignment. So in other words, carefully in, carefully out when things are not perfectly in alignment. When they are in alignment, let's be aggressive on entry and let's try to go for as big of a move as possible. So with that understanding, let's talk about the big picture first of all. So we headed into Friday in crude with the big picture being down. So all things equal, bigger picture, we would rather be trading to the short side. Again, all things equal. That's just, again, one part of it. Additionally, we had this area that we lay out before the day starts of containment, and I'll just kind of draw it like that. I'll just draw it in as a box like that, so that we know that if we're in a containment, that the lower part of that should give support, the upper part should give resistance. If we're able to break below it, it should take off, and if it comes back up here, it should give good resistance up there, and vice versa if we went to the long side. So what ended up happening in the overnight, right before we opened, actually, we tested right above this 49.75, and if you look at an overnight chart, or if you look at right before the market opened, right before 9 o'clock Eastern, it got rejected pretty soundly. So our first clue was that buyers might have a hard time pushing it forward, and if we reject the high of a containment, market logic would dictate that we're probably going to make our way down to the low, and that's exactly what happened. It took a couple hours here, but ultimately we were able to make our way down toward the low of the day. Let me make this a little bit a little less dark, but so the idea is that we have tested up in this area, and hold on. We tested up in this area and rejected. So market logic would dictate we're going to make our way down toward the low of that. So that's kind of the bigger picture story. Again, sellers are in control of the bigger picture bias and our big picture key level. We tested up here. The sellers held, and we made our way all the way down here. That's all really good selling type information. Okay, so sellers would be kind of winning the battle over here on the big picture. Now let's talk about today. What do we have? Well, we had a little bit of an attempt by buyers right in here with these aggression bars, but they had no follow through. That didn't even form what we call a buying box. So it shows us that the buyers are not real strong at that point. And then we get what we call a selling box that comes in with really good selling, makes it all the way down basically to the low of our containment. It's not surprising that's where we ran out of steam. Buyers try to come in a little bit, form what we call an inside box, but get no follow through. It breaks. And then we break to new lows below this containment area with another selling box. Okay, so again, from a big picture standpoint over here, we're breaking below containment. Therefore, it makes sense that this thing either takes off and goes to the next level down, bigger picture, or it comes back up here to the low of containment and we find some resistance and it sells off that way. So that's the big picture side of things. Now on the today side of things, what's going on now, we have this selling box. Okay, I'll make that a little darker. And then we have this selling box as well. I'm going to make this one a little bit darker to stand out. You can see that they overlap right in this area right here. Okay, this area here is where two selling boxes overlap. We know in general, not in general, we know that overlapping areas are very good areas of resistance. Okay, so on the day, the sellers are in control. We have stacking selling boxes. On the day, we know that this area here where these boxes overlap should be a great spot to get short. We know that on the big picture, okay, we're breaking below a containment and we're retesting containment. This should be, everything's coming together beautifully right in this area to really set us up for a big move down, okay? That's exactly what we would expect. We were having a live session. We were talking about this and how, we had the choice to jump in here or wait for a little bit higher. I actually jumped in right there, as I mentioned. And so the question then becomes, what happens when we make our way down to the low of the box? Does it hold? And so we start to move down, and here, boom, we get a break of the low of this box on a level 3 selling aggression bar. This is looking great. This is exactly what we're hoping for, and I was getting excited. I feel like, oh, we're going to take off. We're going to make it down to our next level down, which is not too far down there. It's at we had an intermediate level here at 55, but then our next level down is all the way down at about 48.32. Okay, so I'm thinking there's a decent chance this thing takes off and really goes 50, 60, 70 ticks. Perfect trade, great way to end the week is what I'm thinking. However, what ends up happening? Very next bar, we get this level 3 buying aggression bar. Okay, that's telling us that for whatever reason, buyers stepped in at that point. So we're seeing really good selling. And right there, and it's looking great. The very next thing we see is this level 3 buying aggression bar. At that point, it's deflating really, because that's a pretty good sign that we're coming to an end. At that point, you've got the option. You either want to just put your stop a little bit above that blue bar and just take it there and take a small profit, or you want to bring it to the break-even point and just live with it. I ended up just getting out right there because I kind of saw the writing on the wall. And if we see what ended up happening, that's exactly what happened. We got more buying, and then really the buying just stepped up, took us right through that area where we expected resistance, which is exactly what we got. But once we get down here and it rejects, now we have a new story. Now the buyers have stepped in and really bought this thing. They fire in with a lot more buying aggression right there, and you can see that we just kind of work our way higher and end up kind of closing. Just kind of closing right back in within that containment range. So again, it was a really great setup. It looked like we're going to have a huge move down, but sometimes you just have to admit that things change and you have to just pull the plug and get out. And when that sort of a rejection happens, that's giving us a really big clue for that. So while we're here, why don't I just talk about the bigger picture a little bit heading into next week. What I want to look for here is we've got, for the last 5 days or so, this is a market profile chart. I like to look at this for bigger picture. This is we've kind of gone sideways for the last 5 days. Shows us that perhaps this selling wave, that when we couldn't fill this gap up here from early March, when that didn't get filled, perhaps this selling wave is coming to an end. You can also see it if I split that we tested into this support zone down here yesterday or on Thursday, and the buyers stepped in again. And then when we tested the lows again to really drive this thing back down, once again the buyers stepped in. So I think what we want to look for heading into next week is, can the buyers break above this overlay high, which is going to be at 49.82? Can the sellers break back below there? Otherwise, we're kind of stuck in this consolidation area. That'll be kind of the first area to look for. So hopefully that makes sense. If you have any questions, let me know. Have a great weekend, and we'll talk soon.